Hello, I'm Thom Malone. I'm an economist in the office of the chief economist at CoreLogic, and I'm here to talk about investor activity in the housing market over the past year. Investor activity in real estate markets during the COVID-19 pandemic followed a similar trend to the rest of the economy. Investor purchases reached their lowest point in May 2020 with a year-over-year decline of 36%. Since then, they steadily recovered with a year-over-year increase of 12% in December last year. Even though investor purchases are up, their market share is down. The year-over-year change in the share of purchases made by investors was negative throughout the second half of 2020. This means that the recent home price boom was primarily driven by homeowner purchases. Investors' market share didn't return to its previous level of 16% until December. So, investor activity has been strong, but it is not what is behind the record house price appreciation that we've seen. Things have varied state by state, however. Investors increased their activity the most in the Mountain West states and the smaller New England states. In Idaho, Utah, Maine, and Vermont, growth in investor purchases was in the double digits. High-priced states, on the other hand, were hit hard. California and New York both had declines of over 5%. One thing that changed investment patterns in a way that was unique to 2020 was eviction moratoriums. This deterred investor activity since it brought an additional layer of risk to the market. In places with moratoriums and more restrictive tenants' rights in general, an investor could risk having a renter who doesn't pay and that they can't replace. On average, states with eviction moratoriums saw a drop of 5% in investment activity, compared to states without that had a 2% increase. Of course, tenants' rights are not the be-all end-all in investor decision-making. Local economic and housing market fundamentals still matter much more. Kansas is a low-price, high-growth market, and it saw a relatively high 5% increase in investor activity, even though evictions are still limited there at this time. As moratoriums and other tenants' rights provisions are pulled back in 2021, expect to see investor activity pick up even more and for the pattern of growth across the country to look very different than last year. Thanks for watching today. For more insights on recent trends in housing and mortgage markets, please visit CoreLogic.com.